Download our free guide, Starting Your Photo Business, at photoshelter.com/mkt/research.
Hey, this is Grover from PhotoShelter, and we're talking with a ninja, the tax ninja, Matthew T. Whatley. We're connected to him via Skype in his office in San Francisco, and Matthew's a tax expert. He specializes in helping small to medium-sized creative businesses, and he has many photographers as clients. So, hi Matthew. I wanted to ask you some common questions that are important to photographers, especially when they're starting out. And one question that we hear all the time has to do with incorporating. So when starting a photo business, is it better to incorporate or is it better to operate as a sole proprietor?
All right, so check it out, everybody. When you have the option of whether or not you want to incorporate or whether or not you want to operate as a sole proprietor, the first thing you need to do is look at is, do you need to incorporate? Will you receive any benefit from it? In terms of a small business or a person who's just starting out who doesn't have a lot of income, you probably do not want to consider going as a corporation or an S corporation, which are some of the common entities you'll hear about. And this is just because you're not going to receive any tax benefit from it, because you're not going to have enough income to pay yourself a salary from the corporation, which it's required to do. So if you're going to incorporate, you probably want to consider the single member LLC as your best entity choice. The reason being, this is the simplest thing to operate, and it will allow you to still utilize all of the common deductions that an individual as a sole proprietor can utilize. This is because things like if you are an S corporation or a C corporation, you won't be able to deduct anything. Like you can't deduct your home office, you can't deduct your health insurance. These are things that could be very large deductions to you as an individual. But when you're a single member LLC, you can basically get treated for tax purposes just like you would if you were a sole proprietor. Now, the benefit of having this entity is not a tax benefit at all. An LLC is going to cost you more money than operating as a sole proprietor because there are no tax benefits to having this entity in place. The benefits come from the limitation of liability, which means if somebody wants to sue you or one of your second shooters or other agents or other business people, they have to come after your entity that you're using as opposed to you and your personal assets. So if you have a lot, so you own your own home, you're married and your spouse has a lot of assets, if you're not operating as an entity, somebody's going to sue you and your partner or sue you for your personal assets. And this could be devastating to you economically. At the same time, if you do need to operate as an individual, having insurance is probably the most important thing that you can have, because even if you have an LLC in place and somebody wants to sue your LLC, you still have all your gear and everything else that they could take from you. And so you still will be, you'll be out all of the capital improvement or capital that you've spent on your business for any mistake you made. Meanwhile, insurance is a real insurance policy against getting sued because the insurance policy will pay for anything. And these types of negligence that are usually coming about are if you're on site and you damage something, or somebody you work with damages something, knocks over a light, knocks over something really expensive, then your insurance company is going to pay for that for you. If you have the LLC, they're going to try and come after the LLC for this money. It's still going to cost you something in the long run.
Are the laws for LLCs and incorporation pretty much the same from state to state, or do they vary a bit?
So your LLC is going to protect you from the personal liability in just about every state. The main thing to consider is whether or not it's too expensive to do in your state. Here in California, it costs you a minimum of $800 per year to operate an LLC. That's a lot of money. And if you don't have to spend that $800, it's recommended you don't do it until you absolutely have to. So most people that I have that are just getting started out, you typically recommend that they operate as a sole proprietorship until they have larger clients or more liability that they can incur from operating with other people on their team. So you have to worry about not just yourself, but you have to keep track of other people. Now, if you operate in a state where it only costs $70 a year, why not have it? It's cheap. So that's the main consideration. It's like, does your jurisdiction have an LLC and is it inexpensive to operate?
Wow, that's great info. Thank you very much for your time, and really appreciate it.
Absolutely.